Let's talk about the stimulus, the quality of it, the size of it. Justina Lee is with me for Bloomberg. So, Justina, in terms of this effort today, yesterday was about a sticky plaster on sentiment. Today is about growth.
Right, exactly. And it's pretty unusual, even for Chinese policymakers, for the central bank government to actually come out there and pre-announce this reserve requirement ratio cut, which would be 0.5 percentage point. And they're forecasting that to release about $1 trillion into the economy. And I think that just kind of goes on to show how kind of worried Chinese officials are at this point about the sentiment in the market. And it's kind of interesting that we saw a bit of a mixed reaction. We did get a bit of a bounce in stocks, but not as much of a reaction in terms of like the currency or bonds. And I think part of that just shows how nervous investors are at the moment.
You talked about the rebound in stocks, Justina, but is this enough? Because there's still a lot of disagreement whether you jump in now, they've sold off enough, or if it's just catching a falling knife.
Yeah, and I think there are a lot of people out there warning investors that, yes, those valuations look low, but don't be tempted. And I think that's because, like, there have been many times over the past year when people have said this is the bottom, and it was never the bottom. And I think that really underscores kind of the difference in magnitude of the economic challenges that China is facing right now in terms of, the downturn in the property market, maybe the sense that you can't really just pump stimulus into the economy anymore. So I think what investors are probably kind of thinking right now that is you do need more, and you do need kind of more kind of consistent guidance from the government, and more in the way of maybe a change in economic policy or even more stimulus.
Yeah, well, it depends which piece of research you read. If you look at Schroeder's, Remy Poutin says tactical lift. It makes the country's assets a structural climb, but that could be the incentive to reduce your exposure further. So take your opportunity. Okay, Justina, thank you very much.